everyone is doing well. I hope you're having a great week. Um, just to share a little bit about myself, I've been doing this for over 22 years. I started out in the business cold calling people um, that and trying to get people to either refinance during back in 2003. And it was a loan officer that showed me his commission on one of the leads I had got him. And I asked him, well, do I need to go back to school to learn about this? And he said, no, it's just basic math. And he showed me how to do it. And the rest is history. But what makes me unique is I was an underwriter for Wells Fargo and for USAA and for a few other places. So when I look at a loan, I'm structuring it based on the way that an underwriter would look at the loan. And so I would advise you on certain things that would pertain to you and your situation, okay? But today I want to talk about a few loan programs that are available to you and how they work. A lot of people don't know about these programs because they're not advertised. The only way that you would hear information about these programs is if you're speaking to someone like myself or a family member that's gone through it or a friend. So I'm going to share some of that information with you. So in today's market, we have what we call a conventional loan. Now, for a regular conventional loan, the minimum down payment required is 5%, okay? The minimum credit score is 620. You will have mortgage insurance if you're only putting 5% down. But the thing about the mortgage insurance, what makes it unique for a conventional loan is if the balance or the value of the home is 80% or less, you could get that mortgage insurance removed. You can request to get that mortgage insurance removed, okay? There are, under the conventional umbrella, there are what we call Home Ready, Home Possible, and Home One loan programs for first-time home buyers. Now, for Home One, Home Ready, and Home Possible, you don't have to be a first-time home buyer to be eligible for these programs, okay? Now, with these programs, the minimum required down payment is 3%. What they consider a first-time home buyer is anyone who has not owned a property within the last 3 years. Okay, that's what they consider a first-time home buyer. Now, with these programs, there is what we call annual median income requirement for each county. Okay, and I can go into this later. So if your spouse's income is within those limits, then you would be eligible for one of these programs. Some lenders offer what we call a 1% down program, where you provide 1% of the purchase price and they cover the other 2%. This is outside of your down payment assistance programs, okay? Some of the down payment assistance programs let me explain the process real quick while I'm going through this. So on a down payment assistance program, I have to get you approved with the lender first, and then the process goes over to the nonprofit who is providing the down payment assistance. Their underwriters have to re-underwrite the loan based on their parameters. Their parameters can be different than my parameters with the lender that I'm taking you through. So let's say, for instance, on a conventional loan, write this down, the max DTI is 50%. DTI is debt to income ratio, okay? So the max debt to income ratio, also referred to as DTI, is 50% on a conventional loan, okay? So you can't go over 50% without compensating factors. Write this down. Compensating factors are additional assets like 401k, stocks, bonds, IRA, retirement. You can use that as a compensating factor. If you have a a family member that's willing to sign on the loan with you, that could be a compensating factor. If there's additional income that you're not using or that you don't need to use for this particular loan program, that could be a compensating factor. So it just depends on what it is, the situation, and whether or not there's enough. Because like if you're buying a $500,000 home, you have $300,000 in assets. It's more than likely that the underwriter is going to sign off on that because there's more than enough assets to cover more than half of the $500,000 loan. Okay. They also have they just rolled out, or a few of my lenders just rolled out, zero down. And how it would work is the down payment is provided as a second lien against the subject property. The second lien bears 0% interest and cannot exceed $15,000 or the 3%, whichever is lower. Okay. On this type of program, the second lien has no minimum monthly payment requirements, and the term is 360 months. Okay. And the guidelines are based and underwritten based on the Home Possible Home One guidelines. Okay. So Home One and Home Possible, remember, has that annual median income requirement. Okay. So just keep that in mind. Minimum credit score is a 620 for those programs. Okay. But that's conventional. Another thing, so when they say a second lien, that second lien is what we call a silent second. So you would record two liens on title, and the second, it's what we consider a second lien. So the same thing with the down payment assistance. Down payment assistance is usually a silent, what we call a silent second. So you would have basically two deeds at closing that you would sign, and one will either be forgivable, or if it's not forgivable, it would be after 5 years, it would be forgiven, and you would be able to refinance, sell, or do whatever you want to do with the property. But on this particular one, it lasts for 30 years. Okay. So if you purchase, or if you refinance, or if you pay off the loan, there's a balloon payment for the second lien for that down payment for this particular program for the 0%. Okay, so I just want to specify that. Another program is FHA. FHA, the minimum credit score is a 580. And when I refer to minimum FICO score, it's all three bureaus the middle score, okay? So let's say your high score is 720, your low score is 620, but your mid score is a 665. They're gonna go off that 665 score, okay? Max DTI on a FHA loan is 55%. The upfront mortgage insurance that's included in the loan amount is 1.75% of the loan amount. And then the monthly mortgage insurance is 0.55%. And that would be, you would pay that for the first 15 years that you have that mortgage, okay? Now, there are 100% financing FHA programs, and it's just like the 0% down program. Basically, you can get assistance with the down payment, and it will either be forgivable or it will be have a 5-year term, or it will have no payments. Okay, so, and with the FHA down payment assistance programs, each year it'll go down. So what I mean by that is whatever the penalty is will go down each year until it reaches the 5 years. Okay. And the reason that they do that is so that, or that's the guidelines that the government has given them to be able to give you that assistance. Okay. So if you sell your home or you have to refinance, you'll pay that off through the refinance or the purchase if it's before the 5-year period. Okay. The other thing about FHA loans is the interest rate is usually lower than the rate on a conventional loan. And the reason that is it's the government is providing it. It's a government program. So the rates are better than it would be on a conventional loan right now. You can have medical collections they don't care about on an FHA loan. Collections or judgments over $2,500 would have to be paid at closing. And I'm going to reemphasize paid at closing. So you wouldn't pay it before, you would pay it at closing. Less documentation that you would have to provide if you do it that way. If there's a tax lien, that will have to be paid. Other than that, the FHA loan, if you don't have strong credit, is the best option to go with. And the minimum down payment for an FHA loan is 3.5%. Write that down, 3.5%. VA loans. Minimum FICO score is 580 for most lenders. There are lenders that will do lower, but for most lenders out there, they require a 580 mid score. VA and FHA technically don't require a minimum FICO score, but for most lenders, this is what we call an overlay. And so with that overlay, they, if you want 100% financing on a VA loan, yeah, they want your score to be at 580. With the VA loan, there's no mortgage insurance. There's the upfront fee if you're not eligible for, or if you're not receiving disability, and that can range between 3%, 1.25% of the loan of the loan amount, and it's included in the loan amount. Okay, um, so that's not something that you have to come out of pocket with. Um, Entitlement can be used on more than one house as long as it's your primary residence. Okay, so if you're a veteran, you're active duty, and let's say you get reassigned to Alabama, but you live here in Florida, um, you can, even though you purchased a home here and you used your VA benefits here, you can also use it in Alabama, and you would still be able to use your entitlement to purchase that home. Um, and then after a certain amount of time, your entitlement resets, so that you can continue to use it as many times as you need to. But also, the other thing is with the VA loan and with FHA, if the property is, if you're moving 100 miles away from the current property, you would be able to use your entitlement. Okay, 100 miles. Okay, but it has to be your primary residence. Okay, in order for that to work. On FHA, for the younger couples out there, a strategy, and you can refer, if you follow, I don't know if you follow Julian Gordon, but a strategy with FHA is you can buy a multifamily 2 to 4 unit, and in 2 years, you can go do the same thing as long as there is an upgrade to the newer property. So let's say the first 4 units are, it doesn't have a garage, but you go buy another one that has a garage. That's considered an upgrade based on FHA guidelines, and you would be eligible. Now, again, it can't be right down the street. Preferably 50 to 100 miles away, would be under the umbrella of the FHA guidelines. Okay. If you're buying a second home on a conventional loan, the minimum down payment is 10%. Okay, so you only need 10% for a second home for conventional. Let's say on an FHA or VA loan that you're renting out, you're going to rent out the property. Okay, VA and FHA guidelines state that as long as the property is 100 miles away from the new property, you would be eligible to use that rental income. Okay. If you're self-employed, or you're an Uber driver, or you're a 1099 employee, bank statement loans are your best option. Because the tax returns are probably not going to show your income the way that we would need it to be. Because if you're self-employed like myself, you're not trying to, you're not showing all of, do your deductions and write-offs so that you're not paying so much in taxes. Your 1040 or your K1s, everything is not going to show, everything that we need it to show. So the next best thing is bank statement loans. With bank statement loans, the minimum FICO score is 640. The down payment minimum is 10% of the purchase price. You can use 12 months or 24 months business and or personal bank statements. And then there's a possibility that they'll ask for a profit and loss statement. but you can do a 40-year term on that. So that's a great option. There's another option that's called interest only, but we'll discuss that when we do a master mortgage class. Those are most of the loans. There's asset depletion loans, there's profit and loss loans, there's 1099 loan options. The bank statement loan is a non-traditional loan program, so the rate will definitely be higher than the conventional FHA or VA rates. Your VA and conventional, or your VA and FHA rates are always going to be the lowest. And the other one I wanted to talk about, which I didn't do a slide for, is called the debt coverage service ratio loan. So if you're looking to buy investment properties, with this loan program, you don't have to provide income. The lender will qualify the property based on the rental income. Okay. So the only thing that you have to have a credit score. Some lenders go down to 550 or 500 for this program. It's an investor program. With this program, you have to put down at least 20%. There's some lenders that will do 15%. But with this program, they qualify the loan based off the rental income. So as long as it meets the ratio, so it's the rental income plus the ratio calculation, I'll tell you what it is the rental income divided by the mortgage payment. Whatever that ratio percentage is what they'll use. Now they also have no ratio, and the rate's a little bit higher on that, but you could do a 40-year term, 30-year term, or interest-only term on those, okay? I've gone over a lot of information. I've given you a lot of tips. Any questions?
Hello, Sydney. I have a question. You mentioned about the conventional loan having the, what was it? The private mortgage insurance. You said you could
Yes.
request to get that taken off once you've paid 20% of your mortgage. Is that correct?
Yeah, 20% or the value of it is, the value of your home is 20% of the balance. So if the value is higher, is high enough to where your loan balance is at 79 or 80%, then you can request that private mortgage insurance be removed. And you could do that by one of two ways. Write this down. The lender would request either a broker price opinion, a BPO.
Okay.
And that's basically a realtor would go out and they would provide comparables to show that the house is valued at that, or they'll ask you to do an appraisal.
Appraisal. Okay. Now, question: what about a FHA? How does that work if you want to get the private mortgage insurance off? How does that work?
FHA, it used to be that you couldn't get it off. It was on there for the life of the loan. But now they changed it to 15 years. So after 15 years.
At least 15 years before you can request.
Yes.
Okay, now FHA. Once you get to 15 years, do you have to do the same thing, the BPO or an appraisal, or how does that work?
It would usually automatically come off. You would get a notification from HUD regarding that. But I would still request because you never know when you're going to get that letter.
Okay, because we have some people in here that has homes already, and when you mentioned that, I thought that might be something they're interested in, to get that extra, to $400 taken off of their mortgage.
Oh, absolutely, absolutely.
And the blessed part about VA loan, we don't have to worry about paying that.
The other thing I would tell you about the FHA loan is, let's say you were to refinance your FHA loan. So the upfront mortgage insurance that you've already paid, you would get credited back, okay? The new monthly mortgage insurance is lower than some of the older monthly premiums, okay? So it's at 0.55 right now. It's what was way higher before. So you can do what you call an FHA streamline, okay? Where basically you don't have to provide any documentation or income documentation. Basically, however, the information that you used previously to qualify for the loan is what the lender uses. And so you would be able to, if your mortgage insurance premium, monthly mortgage insurance premium is high, you probably could get that reduced, and that would count as a benefit to you right now, because 0.55 is way lower than what it used to be. And so you would do a mortgage only credit report. What that means is they're only looking at the mortgage history for the last 12 months. And the streamline is like the easiest loan that you could do, because there's just no documentation that you have to provide. As long as your rate and payment is lower than it previously was, by either the mortgage insurance or rate, then you'll get approved for that streamlined refinance on the FHA loan.
Okay, so that particular loan, do you, with your credit, not your credit, but your interest rate change?
Yes, it would change.
It
has to change. It has to be a benefit. If it's not a benefit, they won't approve it.
Okay. All right.
Yeah.
Thank you.
Sydney, I got a quick question. When it comes to down payment assistance, I know there's some stipulations, but is each county, do they offer it, or certain counties or certain cities offer the down payment assistance?
All counties offer down payment assistance. And I haven't even touched on all of the programs that are available to you. This is just some of them. Florida Housing has a program where they provide or help you provide the down payment assistance. But a lot of them, the problem is with the down payment assistance programs is for a lot of them there's a minimum credit score requirement, and for most it's 640. Okay, there are some that don't have a minimum score requirement. There are some that will go lower, but for the most part, they try to keep it the same for some of the other programs. And then the underwriting requirements for down payment assistance is different and could end up taking longer to close because you have to get it approved through the lender that I take you to, but then the nonprofit underwriters have to, or the down payment assistance program has to underwrite. So it's sometimes easier and less stressful, especially for a first-time home buyer, to go through a program like the conventional program where you can take advantage of the assistance that the lender's providing because only one underwriter is looking at it. Sometimes with the down payment assistance programs, our requirements are, any other income in the household we don't care about. But with the down payment assistance programs, if there's additional income in the household, they may require that information. Okay. Oh, and there's one I forgot. USDA loans,
Mm-hmm.
100% financing. Okay. But USDA is unique because they'll include all of the income in the household. Okay, even though that person may not be on the loan, they'll include all of that. But then they also include the utilities. Okay, and the debt to income ratio. So it's a catch-22, but that's 100% financing. Minimum FICO score is the same as FHA or VA. So as long
What
as
do you mean by utilities?
so like your utilities, the water, electric, they'll include that in the review because USDA looks at it different, where they are qualifying it based on everything that you would have to pay for that property. So utilities, water, solar, if you have solar panels and there's payments on those, if you're taking over payments on those, all that would be included in the qualification.
Okay.
Sydney, I wanted to find out, like, I know you do a lot to help clients that don't quite meet the credit score for a particular loan. Can you give some tips, some general tips, what you would suggest someone do to raise their credit score?
Yes,
Just in general.
I will. Yes, I can. But I'm going to say a disclaimer. I am not a credit specialist. Okay. But I can tell you ways that you can get your score up. Okay. The fastest way to get your score up is this. Listen very carefully to what I'm saying. If you have a family member that has good credit, who would be willing to add you as an authorized user on their credit card, okay, that would be the fastest way, because here's the thing. Credit cards give you the highest score, not car loans. No installment loan is going to give you a higher score than a credit card. The next highest tier of scores would be once you own a house. So the house is the highest, second is credit card. And the reason is because once on installment loans, once your installment loan has 10 months left on it, we don't even count those against you, okay? Whereas a credit card is revolving, so you're using it all, they're assuming you're using it all the time, okay? Another strategy, and you have to be disciplined in the strategy, okay, is using your credit card to pay your expenses every month and then paying that credit card off. Here's the benefit. By doing that, you don't pay interest, okay? And it's, for those people that do it, it's what we call it tricking the system. Whereas your credit limit will increase. Eventually, you will get the black card offers, okay? But I personally do this, okay? I was shown this strategy and I personally use it. So I personally use my credit cards for my expenses and I pay it off every month, okay? So I know how much I need to make to pay off my expenses every month. Now, I still have my emergency credit card for emergencies, okay? That's different. But for my expenses that will take your credit card, like utilities, or if utilities will take it, I pay everything with my credit card, and then I pay it off every month. Okay, but I budget for that. So you got to budget, and that's another strategy. But what that does is, by doing that all the time, that'll increase your score pretty quickly. Back to the authorized user. I am not saying, let me clarify, that you're giving your credit card information to the family member. What I'm saying is you're just adding them on as an authorized user. And what happens is the credit history from that card benefits the authorized user. I've seen scores go up 60 to 100 points by doing that. My Jewish brothers and sisters, anytime their kid turns 18 or about to turn 18, they'll add them to their kids to their credit cards as authorized users. They're not giving them the credit card to go spend money. They're just adding them as authorized users so that they can start out having good credit. Okay. And that's all it does, is it provides, so like if I gave my daughter or added her as authorized user, I'm not giving her my credit card. I am just adding her so that she has credit, and she benefits from my good credit. Okay, so if I have I have an 820 FICO score. So she's not going to get the 820 FICO score, but she'll start out with a strong score that she can use as leverage to go buy a property, okay? Or go buy a car, or get financing for student loans for college. But that's one option. The other option is paying down your credit cards to 29% of the credit limit. Write this down, 29% of the credit limit. That's the magic number, okay? If you keep it at 29% of the credit limit, your score will go up. Within 6 months, you'll see a huge difference in your credit score, okay? Before I had good credit, I had to figure it out. And one of the things that I did was I took a high interest personal line of credit, and I paid off what I needed to pay off to boost my credit score. At the time, they gave me a 5-year term. I think I was at like 25%. That's also another way of doing it. And then the great thing about that was I only had that personal line of credit to pay every month outside of my rent and stuff at the time. But there wasn't anybody there. My parents didn't know. I had to figure it out. But thankfully, through working through this business, I've learned a number of different ways to do it. Now, there are credit counselors. You can ask a credit counselor. They may tell you something different, but these are strategies that I've known credit counselors have advised their clients. So I'm not telling you something that credit advisors I work with or others have worked with. These are strategies that are being used on a daily basis. The other thing I would tell you is, this is a quote that I live by, okay? If it is to be, it's up to me, okay? God has given us the willpower to be able to do and achieve and get whatever we want or do whatever we want. But it's up to us. And as long as we have the discipline, and as long as we're willing to make the sacrifice, we can make our dream of owning a home possible, okay? Mm, I fulfilled my dreams, and I can tell you, you can do the same. And you may have to change your way of thinking to do that. You may have to make a few sacrifices along the way. But in making those sacrifices and having the discipline, the greatest gift is the blessing that you receive from God. So that's what I can tell you about that. Go ahead.
Sydney, hey Sydney, I wanted to really quickly ask you about purchasing a second home. And I want to give you two scenarios. And one of the scenarios is if you will have a VA loan already and you want to purchase a second home, can you just give us a quick synopsis of about how you go about qualifying somebody for another home? So basically, what do you do to say that your client is eligible to buy a second home?
So on the second home, well, you would have to buy it under VA guidelines as a primary residence. Okay. What you do after that, don't tell me. Okay. But but yeah, you have to buy it as a primary residence to be able to use the VA entitlement. Okay. And I would suggest that you live in it because they do audits. And so I wouldn't want you to get in any trouble. So yes, so as long as you're buying it as a primary residence, you're fine. You can turn the other property into your second home and you'll be fine. A second home requirement is as long as you stay in the property for at least a week out of the year, then you're fine, according to the guidelines.
Now for FHA, what's different?
For FHA, the newer home has to be an upgrade from the older home. Okay, so let's say you're going from a 3-bedroom to a 4-bedroom, or you're going from a house that doesn't have a garage to a house that has a garage. So as long as you're within those limits, you can do a new FHA loan on a newer property and still hold on to. Now, you won't be able to use rental income if it's not more than 100 miles away.
Okay.
Okay, so if you're thinking about using rental income to offset that mortgage, that's not going to work. I would have to qualify you based on your current mortgage payment along with the new mortgage payment. And that would be both on the FHA and VA.
Right. If it is 100 miles away, though, you could then use one of the rental property as income.
You can use that rental income to offset that mortgage, yes.
How you qualify the individual to get pre-approved for the loan?
Repeat that because you broke up a little bit. I'm
I'm
sorry.
saying that if I had another property, I'm going to buy another house and rent the house I'm in right now. As long as the new property that's going to be the primary is 100 miles away, you could use the rental as income to qualify me for the new property. Is that correct?
Yeah, so I could use the rental income that you're going to receive for the current property. Okay. So you would have to get a lease agreement. Okay. We could use that to offset the mortgage. Okay. So that it doesn't affect your debt to income ratio to qualify for the new property.
Okay.
Okay, that sounds great.
Now on conventional, there is no mile requirement. Okay. So on conventional, you can buy a second home with 10% down. And the same thing applies as long as you stay in it for at least a week. Whatever rental income you receive from that during the rest of the year is fine.
Since the
Oh.
DD10 is up, so
And on a conventional loan, if your current property is a little bit different than FHA and VA. If your current property, if you're leaving your current property and you can get a lease agreement before closing, we can use that lease, the rental income from that lease agreement to offset that mortgage, so that mortgage is not being counted against you in the debt to income ratio for the new home.
And that's with conventional, correct?
Yes.
Okay.
hey, Sydney, I thought that with the conventional loan, they were doing 3% and not 10. It's only if it's your primary?
Yeah, primary is the minimum is 3%. But yeah, if you're buying a second home, it's 10% down.
Okay.
Okay.
He muted himself. Hey, Sydney, how you doing?
Good, how are you?
Doing fine. First, let me say we appreciate you being with us. This is very helpful, and we appreciate it.
You're welcome, my pleasure.
All right. I just wanted to clarify, going back to that authorized user. Just one thing I want to be clear on. With the authorized user, that technically that's just for until you go to closing, and then
Yes.
after that, the authorized user can be terminated or
Yes.
removed.
Yes.
Okay. So it doesn't.
So-
It's not for ever and ever long. It's not for ever and ever all meaning, right? It's for as long as, in this case, as long as it would be needed.
Yeah, if you need it for the mortgage scenario, yes.
Yeah.
They can remove you as an authorized user as soon as the loan is funded,
As soon as you get the keys.
as soon as you get the keys. And the
All
wire from the Fed is received. You want to make sure the wire from the Feds is received first.
Okay.
Mhm.
Copy that. I wanted to be clear on.
Yeah, we only use that strategy for purposes, well, it can be used for more than one way. But in this scenario, yeah, if you're buying a home and if family member or close family friend is willing to add you on as an authorized user, they only have to do that till you close.
Okay.
And it takes 30 days for it to show on credit and for you to be able to benefit from that history.
Okay.
So basically a pay cycle, or yeah, a cycle,
Mhm.
which is usually 30. I normally wait 30 days, and it's usually updated by then.
Okay. Thank you.
You're welcome.
We got like 10 minutes left. Is there any other questions out there? Now's the time. If there's not any other questions, I want to thank Sydney King for getting up here and spending time with us tonight, talking about home buying solutions, using home loans and credit, trying to get your credit up with strategies. Sydney, do you have a slide with your information up there if somebody wants to get a hold of you, or can you let them know how people can get a hold of you?
Yes, let me put one up for you.
But I definitely appreciate you.
You're welcome. So here is my contact information. I'm not only licensed in Florida, but I'm also licensed in Colorado. If you're looking to buy an investment property in any state in the US, I can help you with that. But if you're buying a primary residence in another state, then I won't be able to help you with that. Only in Colorado and Florida. But if it's an investment property, I can help you in any state.
I don't see the info. Is it up there, Sydney? Or you?
Or is it not
Yes.
showing?
No, it's not showing.
Oh, let me see.
Yeah, we can't see it.
Hold on. Let me go to my share button.
Mm.
There we go. Do you see that?
Nope, we can't see it still.
Okay, hold on.
Yeah, we still can't see it. I'll tell you what. Okay, maybe now. I don't see nothing yet. We don't see it yet.
You see that?
We see it now. Yeah.
Oh,
So take a picture of that if you're interested in getting a hold of Sydney.
yeah, call me if you have any questions. I'm more than happy to answer any questions that you have. If you're going through the process right now and you need someone to look at your loan estimate or good faith or closing disclosure, I'm more than happy to review that for you. If you need down payment assistance information, each county, there's thousands of different down payment assistance programs. I don't have the time to go through all of them, but there is a lot for each county, especially Orange County.
Yeah.
There's also a program in Claremont called New Beginnings. They'll also help. And what else? And the Florida Housing has programs also.
All right. Well, I definitely appreciate all the information, you being our guest and coming up here and sharing all of this information about loans. Definitely the people that heard this, and we actually, I think, was recording and we streaming, they'll have your information. Thank you again, Sydney King. I pray you have a great night, man.
Thank you, Pastor Ed. I appreciate it.
All right. God bless
My pleasure.
you. Bye-bye.
Bring the hook in.
If you said it, then believe it. Habibi, you receive it. So count your many blessings. Blessings you're receiving from God. I faith in knowing higher. Look up to the Messiah. Know I'm written to the fire. Anything is possible with Christ. With Christ. And if you said it, then believe it. Anything is possible with Christ. With Christ. I know I'm written to the fire. Anything is possible.
I'm living life to the fullest, never taking the moment for granted. Spitting knowledge, it's important that you understand it. I speak the words of Christ, demons can't stand it. The truth hurts and my lyrics raw, they wanna ban it. It takes a touch for a testimony.